Welcome to our top 6 auto finance tips. First up, understanding that when you finance a car, it's literally like nothing else you're going to finance because of the speed at which the car depreciates. If you're a lender, you understand that a car is going to be worth 20 to 30% less in the first 12 months, and maybe as much as 50% less in the first 24 months. So the number one criteria for any auto lender is to evaluate the loan to value ratio. If you want to borrow $20,000 and the car you're borrowing it against is worth $30,000, that's great. That's a 66% loan to value ratio. If you want to borrow $30,000 against a $20,000 car, that's 150% advance, and there's almost no lender who would even approve that deal. And if they did, the interest rate would be extraordinarily high to try to cover the risk.
That's a good point, Jim. You need to know what the price of the vehicle is going to be. And on a new car, that's pretty simple. They have what's called the manufacturer's suggested retail price, or in the jargon, MSRP. So you can take a look at the window sticker on a new car. On a used car, what you want to do is check the used car guides online. You have Kelley Blue Book at kbb.com or edmunds.com, which will provide a used car value. Now remember, these are only guides. Things will vary based on your market, the type of vehicle, the mileage, and the condition of the vehicle. So it's important to take a look at that.
Now that you have those figures, knowing what you can and cannot afford, do a little homework. Go onto the manufacturer's site, find out if there are any local incentives that are going to be applicable for you that you qualify for, so you understand exactly what the best rate is that is available to you. And then check with your bank. Don't just go ahead and get the loan from your bank. Check with your bank and have all the numbers prepared, so when you go in, you know exactly what you can and cannot afford on a monthly basis.
Next up, a couple of simple things that are too often overlooked. Number one, getting prepared to fill out the credit application. So first and foremost, check your FICO score, make sure all that information is accurate. If not, contact the bureaus. Number two, plan on income verification. You got a full-time job, plan to bring a pay stub. If a year end just came and passed, bring a year-end stub as well as a monthly stub. Same for your spouse, whoever else might be signing. If you're in business for yourself, that means at least 1 and maybe 2 years of tax returns that a lender likely will want to see. Number three, insurance. Don't forget that even if you have full coverage insurance on whatever you're driving right now, your insurance is likely to go up because you're buying a brand new car or leasing a brand new car, and the value of that car is going up. So important to be prepared, important to have this information available. Even at least 1 or 2 references as well.
After establishing a fair price for the vehicle, you want to calculate exactly what you've got in your monthly budget that you can afford for a car payment. So the first step is to take a look at what your net take-home pay is. What do you have that's spendable after your taxes? Then from there you want to deduct your mortgage payment or your rent, your utility bills, your TV, your telephone, your cell phone, any other credit card payments or loans that you've got, and then your food. So that'll give you a number that's left over, which will comfortably handle your car payment, and you may not want to spend that full amount, so you take a portion of that. Then you want to estimate what your buying power is going to be. So if you calculate you've got about $250 a month that you can spend on a vehicle, at a 60-month term, at about 3%, you're able to finance around $14,000. So if that's correct, you get with your car salesperson or the manager at the dealership, confirm that your numbers are correct on the vehicle you're looking at, and then go out on the lot and find a vehicle that fits your budget. So you can back into it that way. That way you're able to get a payment that meets your criteria, covers the things you need to cover, and provides the vehicle you want and need.
I love telling a quick story. I am in the automotive industry, and even when I was buying my most recent car, I went ahead and did my due diligence. I went on to bankrate.com, found out what the local rates were available to me, and then I went to my own bank, my own branch, and they were giving me I think it was like a 2.29, a really good rate. But a branch only goes and gives 5 or 6 loans out of each branch a month. When I went to the dealership was able to get me a loan with my own bank for a full point less than what my own bank was willing to do. So recognize that if a dealership is able to give out 200, 250 loans every single month, they have a lot more buying power and rate power than I do as an individual person going into my own bank. That's just one story that I always share with everybody. Do your due diligence, know your own figures, know your credit score. You can pull it from Experian, you can pull it from TransUnion, whatever you prefer, and know your numbers on what you're comfortable with, and then go into the dealership and see what you are being offered by them.